Today, global financial markets are reacting sharply to the latest U.S. Federal Reserve interest rate announcement. In a surprise move, the Fed raised rates by 0.75%, the largest single increase in nearly 2 decades. The decision aims to curb rising inflation, which has recently hit a 6.5% annual rate, the highest in over 30 years. Wall Street reacted immediately. The Dow Jones fell by 1,200 points, the S&P 500 dropped 2.1%, and tech-heavy Nasdaq lost 3.4%. Analysts attribute the declines to fears that higher interest rates could slow economic growth and affect corporate earnings. Across the Atlantic, European markets also tumbled. Germany's DAX fell 2%, while the UK's FTSE 100 saw a 1.8% drop. Investors are closely watching the ECB's upcoming policy meeting, as Europe faces similar inflationary pressures. Oil prices surged to $95 per barrel amid ongoing supply chain concerns and geopolitical tensions in the Middle East. Energy experts warn that higher oil costs could further strain household budgets and global logistics. Meanwhile, the U.S. housing market shows signs of cooling. Mortgage rates have surged past 7%, leading to a slowdown in home sales and price growth. Economists predict a potential soft landing, but caution that consumer spending may be affected if borrowing costs remain high. On the employment front, the October jobs report revealed that the U.S. added 180,000 jobs, slightly below expectations. The unemployment rate remained steady at 3.7%, indicating that the labor market remains tight but stable. Global reactions have been mixed. China's stock market saw a modest decline as investors recalibrated for potential ripple effects. Meanwhile, Japan's Nikkei rose 0.5% on expectations of continued stimulus measures. In political news, U.S. Treasury Secretary Janet Yellen emphasized that the Fed's actions are necessary to ensure long-term economic stability, while urging Congress to support measures that boost infrastructure and growth. Experts caution that the coming months will be critical for both investors and policymakers, as the balance between curbing inflation and sustaining economic growth becomes increasingly delicate. Stay tuned to World Pulse News for live coverage of these developments and in-depth analysis of their impact on global economies.